Welcome. Thank you everyone for coming to our next research rounds speaker series. Appreciate having everyone here. As we get going along, I'm going to send around a piece of paper with a blank piece of paper. You guys can all put your name on it. That way we can justify providing you cookies and coffee and keep doing it. Much appreciated. All right, so before I introduce Dr. Lisa Bates, I'd like to let everyone know that next month we have Assistant Professor Jennifer Tappan from History, who will be giving a research rounds talk. Jennifer is a historian who studies the history of medicine in Africa, and her talk will focus on a book that she recently published on the topic. So without further ado, I'd like to introduce Assistant Professor Lisa Bates.
Associate Professor, thanks.
What's that?
I'm an Associate Professor.
Yeah, all right. Sorry.
The little things matter, Sean.
From Urban Studies and Planning. Today, Lisa is going to talk about the work she's doing looking into preserving affordable housing on proposed mass transit routes here in the metro area. Without further ado, please take it away.
Thanks, welcome. Thanks you all for coming. Hi to those in the Facebook live land. I'm sure that's two people, maybe like my mom. Just kidding, my mom is Christmas shopping. She's not watching this. So thanks, Sean. I'm going to be, as he mentioned, talking about the research that I've been doing over the past couple of years. Before I start, I really want to make a particular point to talk about the sponsors and partners of this research. You know, we always have a little disclaimer saying, yeah, the funding and the partners, but in this case, it's really important to me to acknowledge not only my PSU co-authors and co-conspirators, Dr. Aaron Golub, who's an associate professor in urban studies and planning, and PhD students Seong Sung and Devin MacArthur, but especially the folks that I've worked with at the Bureau of Planning and Sustainability on this research. There's Ryan Curran right there. It is a Southwest Corridor Equity and Housing Advisory Group who have given quite a bit of feedback and help, and Radcliffe Dakine, who worked with us on the Powell Division corridor project, as well as Alex Howard and Uma Krishnan, who are working in other roles in the city now. But the work that I've been able to do with BPS, thinking about gentrification, vulnerable people's potential to be displaced from their housing, and in concert with this work has been, I think, you know, a productive partnership in terms of thinking about how we here at PSU can work with our local governments. So thanks to all those folks, and also to NITSE, the National Institute for Transportation and Communities here at TREC, which funded part of this work, as well as BPS. So what's the problem here, right? Is public investment in transit causing gentrification? This is a tremendously hot issue around the country and here in Portland. This is from 2002's Interstate Alliance to End Displacement, working on affordable housing on the Max Line expansion into Northeast Portland. This is one of the hottest issues in cities today, the question of, are public investments driving gentrification, and should cities be doing something about it? This is not the question that my research answers. And in some ways, I actually think it's not that useful of a question to ask for a couple of reasons. One reason is that, as we know in the city of Portland, but in cities around the US, there are people being displaced by what we would describe as gentrification, significant neighborhood changes to demography, to character, and to investment patterns in lots of contexts, with or without transit investments. And the reality is that the basic tenets of urban land economics tell us that when you extend transit access to a place, you increase the value of the land. So of course it's going to make things more expensive. Of course it's going to make housing pricier. And of course, if we build new development, it's going to be at the high market end, unless we do something differently. So in some ways, I find it to be sort of a trivial and obvious question, that if we don't do something differently, that yes, new transit will make places more valuable, more expensive, and that will come at a cost to low-income folks who live there. But when we ask the question, did this transit line cause this gentrification, we sometimes get stuck in like a methods debate that is, sort of to me a sideline from the real fundamental questions of justice in our city. Another bad cul-de-sac that we might go down when we start talking about whether transit causes gentrification is to wrongly imagine then that what people are saying when they raise that issue is, don't bring me any public investments, don't bring me any infrastructure, right? Don't give me transit, which is really not what's happening. What's happening is a cry for an equity or justice approach to transit, right? So how can we move from sort of saying, does transit cause gentrification, yes or no, to saying transit is a critical lifeline to opportunity. And access to that mobility, access to moving around through the city is something that all communities deserve to have. And the people who depend the most on transit, low-income folks, renters, people of color, immigrants, young people, are the ones who are most likely to be displaced by market forces. So if we want to have an equitable orientation toward transit planning, then we need to make sure that the people who need transit investments the most are able to benefit from them, i.e. they can keep living nearby, or they can move in nearby into new development. This makes sense to me from a sort of urban justice perspective, but it also makes sense if we think about the other reasons we want to have more mass transit in our cities. If we want to reduce traffic congestion, if we want to reduce greenhouse gases, then we need the people to ride the transit, right? We need folks to be on the transit. And if you're a transit agency, you want those riders because you need fares and you need to support continued operation of your service, right? So all of those, from all of those point of views, you need to have the people who actually ride transit to be able to live near and access that public investment, right? So if we do transit extensions without considering housing equity and the potential for displacement as we increase the value of land and properties nearby, we are sort of inevitably going to see housing displacement and the disconnection of people to access to transit. This is a live and real issue in Portland right now, right? So this is analysis by TriMet looking at the change in ridership on transit lines. So red are going down, right? And the alignment here of the places where in purple, housing values are going up the highest and transit ridership is going down the lowest. Right? So our inner neighborhoods, the most transit-rich areas, right, our vaunted transit-oriented development corridors is where ridership is plummeting. This is in accordance with research on transit-oriented developments nationwide, particularly out of Northeastern University, where they found that when transit-oriented development is high-end, market rate, high-income folks, they still drive their car. Right? They don't suddenly get on the bus or suddenly get on the train just because they live in a more convenient location. Their drive is shorter, right? Their TOD development may have great restaurants and shops and other mixed-use things to go to, but they are not riding the transit when they go to commute every day. So then you don't meet any of these goals that we just talked about. And the folks who ride transit the most, where transit ridership is going up, in outer Portland have the least access to transit, have the least mobility when it comes to transit, right? It's one of the reasons that the Powell Division Transit Corridor project that I worked on was interesting and important to me because it would extend transit into those areas. But again, trying to be really careful as we improve that mobility, how can we ensure that those folks who are riding transit, who need and depend on transit, can continue to do so, right? So what we really want to do is to plan ahead, right? When we really think about how to best address the combination of transportation needs and housing in place, right? To maintain that kind of diversity and equity of opportunity is to think in advance, right? So I said, I'm not really answering the question of whether transit causes gentrification because I'm working in a context in which we're planning for transit. So we're ahead of those lines opening. It is important to think far ahead because people who invest in real estate think far ahead, right? One of the difficulties in measuring the impact of transit lines on gentrification in a neighborhood is, when do you start measuring? It's not the day the station opens, because the real estate has been under development for years. So is it that people buy land near transit plans when they see this is our metro corridor and transportation systems plan, right? Am I an investor who can speculate ahead for 10 years and hold land? So we have to think far in advance to understand the kind of changes that are already in the works and ones that are likely to be exacerbated by the opening of transit, right? So, and in fact, this problem of the way that we plan for transit and housing together and how the real estate market acts has been identified as a really key challenge at the federal level for coordinating these planning, right? Because oftentimes our affordable housing agencies can't buy land and hold it for 15 years while they wait for a light rail to open. They can't even hold land for more than 5 years while they wait to assemble funding. So there's been some attention and some work done at the federal level to think about, how do we coordinate these two processes better, where you have a transportation systems plan that's 20 years out and you have a housing plan that's 5 years or less. So in this set of projects, what we chose to do was, again, to sort of look ahead, try to be prescient, think about the trends that are happening now, and understand the unique housing conditions and the unique people situations in places that are likely to receive these kinds of public investments, and figure out what are the specific mechanisms of displacement that could take place, and can we do anything about them, right? So asking about who are the people most vulnerable to housing displacement, what are the challenges that they face, and then sort of what are the housing types that are precarious in our market, or subject to potential reinvestment, right? So if I can take a side note here for those who are not housing people. When we say affordable housing, right, in our popular conversation, mostly what people are talking about is subsidized and regulated housing, right? When you open the Oregonian and you read about transitional housing or supportive housing, or you see things about 60% AMI or 30% AMI, those are referring to income levels that are regulated. Those are referring to things like low-income housing tax credits, or federally subsidized housing, or money that comes out of our local bond, for example. That is actually a very small slice of housing. And it is totally inadequate to the number of people who are actually income-wise eligible for that housing. Nationally, about 1 in 5 households with incomes eligible for subsidized housing actually gets low-income subsidized housing, right? So the vast majority of folks who need affordable housing live in the market. They just live in housing that's cheap, right? That's why we call it naturally occurring affordable housing. So our sort of market rate and market affordable housing here, you can see over 1/3 of the units that we have. This is nationally, right? And we, editorial aside, our national housing policy for housing affordability is trickle down. It is to build at the top end and wait for those units to filter downward over time. That's how we get this naturally occurring affordable housing, right? Eventually. So there's also a lot of conversation here locally, regionally, about how much housing new construction is happening. We've got tons of multifamily construction. Shouldn't that alleviate this challenge? But it takes a while for housing to go from brand new to what we would consider to be affordable for a low-income person. Yes, it makes the market for high-income housing a little softer, but it doesn't get down into people who are actually low income, a minimum wage earner, for decades. So nationally, there is a lot of new construction happening in the high end of the market, but you see that vacancy rates here are barely moving. And regionally, we've got high quality housing with vacancy rates 7, 8, up to 10%, right? Buildings where they're offering concessions and rent specials to get in. But if you are in what we consider to be a naturally occurring affordable housing, a lower quality or mid-quality unit, you're still facing a very low vacancy rate, very tight market. And the best research, quantitative research out there shows that it takes 50 years for a new unit to filter down to a low-income person. It's not 5 years, it's not 5 months, it's 50 years. And that assumes that you are on, that's sort of all things equal. That's not in a hot urban market like Portland. Filtering, as it turns out, isn't one direction. So what we have now is, as you could see in those TriMet maps, old parts of the city are being redeveloped, upgraded, right? Renovated. And so those units become more expensive again. It's not just a natural flow that the units that are in close-in locations that are oldest will always become cheaper over time. So in our region, very hot, very interested in urban core living, this filtering process gets even slower and stickier. So what we're thinking about then are the conditions under which these kinds of market, unsubsidized, unregulated units could be lost from that low-cost market. And folks in the advocacy community have started to rechristen the naturally occurring affordable housing, what people call NOAA. Is it just a hot mess? Housing affordable until the market speculation starts. It was coined in an article called Thoughts on the Unnatural Occurrence of Cheap Housing out of the Bay Area, where they're also seeing a tremendous amount of upgrading, regrading, flipping of properties when the market speculation starts, right? So my questions again, we're looking at what are the conditions of vulnerability, precarity, and some opportunities for preventing displacement. So when we think about who are the people who are vulnerable, I already mentioned those who ride transit, and it aligns very much with those who are vulnerable in the housing market. It's low-income people, renters, people of color, and immigrants. So we looked quickly at what the cost burdens are for people at different income levels right now. So cost burden means you're paying more than 30% of your income on housing. We consider that to be a baseline above which your other spending on necessities starts to become squeezed. And obviously, the lower your income is, the more severe that burden is, even at that same 30% level, right? So an extremely low income person below 30% is, very extremely likely to be cost burden. 3/4 of folks at that level are cost burden in their housing. A 50% is about 2 minimum wage earners in Portland. In our region, as everywhere, people of color have a much greater incidence of housing cost burden than do white folks. It's about 10 to 15 percentage points higher across almost all communities of color. The exception to that on the metro scale are folks identified as Asian in the census. But if we drill down to areas like the Jade District, which is part of the Powell Division Transit Corridor, we find that in the Jade District, the disparities for cost burden look just like other communities of color because folks are lower income there. So it's important to sort of think about some of the complexities in place around housing affordability. So we sort of know this. This is probably not a surprise to anyone about who has cost burdens and that rents are going up, right? Rents are going up. Rents going up have slowed a little bit, but they're still going up, and they're going up even for low quality housing, right? But we wanted to drill down into types of housing that could point us to potential challenges, but also potential opportunities, right? We looked at 2 housing types that are like quite different in their operation and management, but are prevalent in sort of different parts of the city. And we tried to pick out some types of housing that are in these kind of emerging trends, these national trends for hot markets that, right, this is part of the precarities. You have national real estate groups saying, hey, buy moderate income apartments, affordable apartments. Those are great investments right now. Some of those folks are promoting the preservation, and some of them are promoting the regrading and conversion of those types of units. So we took a look both at the single family and small unit, so single duplex to quadplex rental market, and also large multifamily that are low cost. The former being more concentrated around that out to East Portland, Powell Division line, and then the larger apartments, we started looking at Southwest Corridor, but we have done a regional analysis there. And they have some very different challenges and opportunities. Small rental housing along the Powell Division Plan BRT, which goes out to Powell Boulevard, up 82nd and out Division into Gresham. There are a lot of these units in our region. About 1 out of 5 rental units on this corridor are in this small rental category. And many of them, the majority of them, are owned not by people who own lots of units, but by people who are sort of individual owners, small owners. So it's not a large investment company. Like in some other cities, the single family stock is sort of big investment companies that bought up lots of houses, particularly after the foreclosure crisis. It's not so much in this corridor. Most of the units are in fair condition, which is not great, but it's part of why they're lower cost. And those individual owners that are not an LLC, so they haven't formed a limited liability corporation to run their rental units, they're just individual people, are the most likely to be in poor condition across owner types, right? The real challenge for this research is that we do not have a regulatory framework here that allows us to know very much about what's happening in this part of the rental market. We do not have a mandatory licensing program like they do in other cities. So when we contacted other researchers who had looked at single family home rentals, they said, well, go to your licensing department and get every single family rental address. We don't have that. Go to your mandatory inspection program and find out what all the inspection reports are. We don't have that. So it's very difficult actually to uncover what exactly is happening in this small rental market. What we do know is both based on our sort of literature reviews and then research where we tried to interview folks from landlord associations and property managers, is that many small owners have limited capacity. And that is part of why the conditions in their units are not that great, because they are what in the literature we kind of call accidental landlords. They may have inherited a house. They had a house that they didn't sell because they thought, oh, hey, I'll keep this for my retirement. That'll work out. But they're not professionals. They're not managing it in a way that is necessarily based on a business model, right? It's a sort of month-to-month, back-of-envelope calculation of what you can handle. Many of those owners are themselves not particularly cash rich. So doing major repairs may be very challenging for them because they don't have the credit or the capital available to do those kinds of work. This owner type is also somewhat idiosyncratic and very difficult to engage. One of the biggest challenges of our research was that during the course of attempting to do outreach, there were a number of policy changes happening in the city of Portland, such as relocation fees for large rent increases, conversations about licensing and inspection that were inflaming the small rental owner, the mom and pop landlord, and making them quite distrustful of research and policy aims. This is something which is mentioned frequently in the literature, that the small owner is often does not want to engage with policy processes. The other sort of complication of this market, which is not really discussed in the literature very often, but we found to be a prevalent scenario here, is the single family owner who is using a professional property manager to manage their property. So it's actually the property management firm who has a sense of the entire portfolio of the market rather than any individual owner. Some property managers are very in touch with the market. They are ready to raise rents. They are prepared for a new transit line to come and the kind of demand. They know that there's a shift in population eastward, and they're ready to pick that up and raise rents, you know, the moment that they see that option in the market. Whereas an individual property owner may or may not be well in touch with that. Other property managers are more aggressive, right? They may be more aggressive in driving and pushing rents as high as they can. One of the practices that we heard about was Craigslist fishing. So you put your rental unit out onto Craigslist at a price that you know is well above the comps in the market, hoping for the mythical Californian to see that listing and think that seems very reasonable. And you would just lower the price a little bit at a time, week by week, until you hook, you know, your Angelino. And so that is another way that prices can be pushed in the market beyond what, you know, folks who have been in Portland think is reasonable, right? So the property managers are sort of complicated. There are also some property managers, though, that are more active in taking a role to require their owners to do repairs, that they don't want them to fail an inspection. They tell them to save money, to, you know, put money aside to be ready to repair those windows or deal with that mold situation, because they are concerned about the loss of income that would happen if a unit were to fail an inspection or be considered uninhabitable. So they have that sort of business mindset as a property manager that some individual owners don't have. But it's very challenging to predict which units might flip or exit the affordable market with this mix of owners and mix of a kind of business mentality or a long-term, you know, hold this and invest mentality, people who want to be very hands-on with the rental property, but a lot of folks who don't really want to be involved with it at all. It's out there and I'll sell it later for my retirement. The one challenge that we did pick up on is folks exiting altogether and selling. Because of the hot single-family homeowner market, they saw opportunities to, you know, get their equity, get their return, and actually sell their home into the home ownership market. So now that's a balance, right? It's great for people who want to become a first-time home buyer and can now buy a house at, you know, 122nd Ave, but not great for the person who was renting it before, as we sort of lose those units. So it was a challenging space for the research, but also in looking for best practices of what you could do about this. Many cities, many programs have tried to engage and sort of said, well, that was hard. It was hard to engage with owners. It was hard to get their financial capacity up enough to participate in a loan program. It's hard for a city to have the capacity to do continued compliance monitoring over, you know, many dozens of scattered site single-family units. Are you going to inspect them all? Are you going to check incomes on all of them all the time with non-professional managers? That's pretty challenging. And this followed on to some of my own research in New Orleans, where their small rental landlord program just kind of flopped. People couldn't handle the financial paperwork. They didn't really understand how to maintain compliance in the program, and so they just kind of didn't apply or dropped out. So this seems to be a really challenging space for working in housing preservation, but everyone that we spoke to, both locally and also nationally, also flagged it as critically important. Because again, you're talking about 1 out of 5, or in some places 1 out of 4 rental units are in this small unit. But it's like the nut that no one has quite cracked yet. So as we move forward in research in the Southwest corridor, we started to think more about the multifamily properties. Again, in speaking with national experts, they said the bang for the buck is when you can buy 100 units in one fell swoop in one building. So looking at the Southwest corridor extension coming down here into Tigard, we started to overlay the sales of apartment buildings over the past decade, and realizing that after, of course, the market crashing during the recession, that there's been a huge resurgence of multifamily sales. And in fact, 20% plus of the decade sales have occurred just in the last 18 months. The market is quite hot, remembering that our national real estate friends said buy, buy, buy on affordable and moderate income market rate apartments. They're a great investment. And there are clearly, given the geography here, different strategies for investing by the folks who buy these buildings, right? So this isn't a regular individual person buying this, right? This is companies, this is investment firms. These are larger companies. So the downtown area and our close in, we did see a tremendous amount of activity along these corridors, these transit corridors, but also you see the kind of longer term speculative investment in areas that may not be high priced now, but if you can hold on to that investment, they will be, right? Your St. John's and East Portland. So this is potentially affecting folks everywhere. Of course, we are in a state that has very limited renter protections, right? So the purchase of an apartment building could mean anything from a building-wide no-cause eviction immediately to rent increases, large rent increases that people just can't sustain, to a complete upgrading and overhaul of the building to create a more amenity-rich environment that then can sell for more money. So when we talk about the multifamily sales, we're talking about the potential displacement, again, of large numbers of families at once, something which has been in the news with buildings like the Normandy and Titan Manor, where folks have come out sort of in protest to say they're all getting no-cause evictions at once. As we looked in the Southwest Corridor, another interesting sort of finding was the perception of Southwest Corridor is this is high-income folks, right? This is a rich part of the city. In fact, there's 11,000 units of this 2- and 3-star mid to low quality apartment rental there, which have the potential to be regraded. So that's a tremendous amount of housing. Much of that and much of this housing are in 2- and 3-bedroom units. So family-sized housing, which is exactly what we keep talking about in the affordable market having a shortage, right? So we want to have those bedroom sizes. This kind of housing also has a strong impact for communities of color. And we found that the very high volume sales tracts, the sales tracts that have very high levels of sales compared to the average, that many of them are areas that are also more racially diverse. And again, as we look in the Southwest Corridor, we have, what for some folks was a surprise, that there are communities of color living along the Southwest Corridor. In Tigard, we know there's lots of Latinos, but all along the corridor there are clustered groups of people of color living in these lower cost housing units who have created cultural communities and do not want to be displaced from them, right? So part of the racial equity strategy could be to look into these units around the region. I would also just note that this is not a Portland-specific issue. This is really quite regional, and some of the suburban jurisdictions have had very high levels of apartment rental transactions over the past, since about 2010. This is an area where there can be a high impact of preservation sort of all at once. If you're able to preserve a 100-unit building, you might be talking about 300 people or more. It requires being quite attuned to the market because the buyers of these buildings are ones with deep pockets, capital, and the ability to borrow. They act with the market. They have a market strategy and a business plan. It's not quite as haphazard as the single family market can be. And so thinking about a market-oriented strategy would help to identify potential areas that could be getting hot, but also to think carefully about these sort of opportunity areas around a transit development that would both be at great risk for regrading, but also would provide, very amenity-rich environments for low-income folks. So editorial aside number 2, we have a lot of conversation about creating new housing. We have a lot of conversation, and rightly so, about the subsidized market, the permanently affordable market, supportive housing, et cetera. But we don't have as much conversation, not just here, but nationally, about preservation. We have many thousands of housing units that are already low cost that are at risk of being lost. I went to a conference with the housing director of San Francisco, and he just kept saying, preservation is the new construction. We can't afford to build enough new units, but we can preserve the units that we have for less. If we view this as part of a very critical public infrastructure, as much a part of public infrastructure as our transit infrastructure, we can see that it's important to the function of our city that folks of diverse income ranges and people of color are able to live in places where they can access other stuff. So again, when I come back to the question of, well, does transit cause this gentrification? I mean, yeah. But also, transit gives us an opportunity to extend access and mobility to groups who need transit. And it provides a planning hook where we can think about these things ahead of time, far in advance, and develop strategies to leverage investments, to bring resources in around a public infrastructure investment to expand our concept of what that would look like to be equitable and just transit-oriented development that includes affordable housing. The end.
We have about 15 minutes for questions if anybody would like to ask some questions.
Mm-hmm. Yes.
So could you articulate a strategy that a city administration would be able to best take? I mean, it sounds like buying existing apartment buildings, what you're just saying.
Yeah, so that's one of the strategies that we outlined in our report, and you can get our report on the BPS website. In the Southwest Corridor Planning study looks at some of the practices that are happening. They're quite like a market-oriented strategy that puts together funds. There's different structures of how you would put together a fund, but basically through public, private, and philanthropic capital partnerships to purchase entire buildings off the market and sort of stabilize them. Yeah. Oh, MERP table. Yes.
So I have a question about those individual mom-and-pop landlords.
Mm-hmm.
One is, I think, is it true that if you just own one unit of housing, you don't have to comply with fair housing laws?
Yes, there are some exceptions to fair housing for single owners.
Only if you live in it.
Okay.
You have to live in it, a fourplex or less, to be able to not comply with fair housing laws.
Yeah. So there's, yeah. So I'll just repeat that. So if you are living in a fourplex, you are exempted from, parts of federal fair housing.
And then, so I have like a couple of different thoughts about this, but I guess one nice theory is that these people also might be more amenable to having people or taking less of a return on their rent and having people who are unrestricted income or whatever to live in these units. Did you do any research about like kind of their views on that, or if they had any altruism?
We were not able to, I would not want to make any firm conclusions on that because of the difficulties that we had in our sort of outreach strategy. But certainly, anecdotally, there are people who feel some mission orientation, perhaps, or who are interested in maintaining, some sense of contributing to the community through having lower cost housing. And so that would be the kind of person that you could target with a kind of program that would be like a loan or a grant or some kind of forgivable loan in exchange for maintaining affordability to make sure the property is habitable and is good quality, and sort of get those hooks in.
To piggyback off the Sean's question in Southwest, did your report talk about the preservation package that you just mentioned
Yeah.
in the answer?
Yes.
So one of the things that comes up in my mind about preservation and those big complexes that come online is the off-market transaction. So a lot of it is like, you know,
Yes.
a developer going to the broker saying like, find me a place, and brokers talking to people, talking them into a sale that's not on market. So how does the public sector keep up with something that's happening off market?
Yeah, so in the really sort of hot market places where that is a big component of sales, for example, the Minneapolis-St. Paul area, which is one of the places that we had a lot of contact with in trying to understand their program, and they've been, you know, having some exchange, some policy information exchange. It's not the public sector that's directing these funds. It is another entity that operates like a private market actor. So they've got that broker with the inside scoop butting into the conversations, and they move very quickly. That, in fact, one of their lessons was there isn't time to go through the kinds of public processes that you would see in a public sector program. You have to move at the speed of capital, which means that you're outside of that kind of process. So it's a different kind of targeting. It's targeting where the pro forma works, the money fits, and you can get the property. But they need to move both quickly and in that off-market space. Yeah, you're absolutely right.
And some of that's in your report.
Yes, and I think there was a bunch of materials from the Minneapolis program in particular that you can find and sort of learn more about how they're doing that.
Morality doesn't quite motivate private actors in the market the way profits do. So how do we emphasize and provide affordable housing for vulnerable people who don't have the same institutional access and power to influence these types of decisions?
Yeah, so, well, for example, in the programs that I was just speaking about, these multifamily investment programs, it's really not about, I mean, there's a mission to it. It's mission investment capital, but there is a return, right? It's just people who are saying, I'm willing to take this slower, longer return of rents in a building that functions perfectly well. I don't need to sell it tomorrow and turn it into many more dollars. So there are investment vehicles that are interested in that long-term, slow growth kind of property. And there are small owners who want to contribute in that way. But that is one of the challenges. Sort of how do you mix a market mentality with a mission mentality? I think that a lot of these funds are doing that, you know, pretty effectively because they have traditional capital that wants to have a long-term, stable, steady investment, right? They don't want to be in the volatility. They want some part of their investment portfolio to just look like a nice straight line going out, and that's part of their portfolio. So that's the pitch to them. Yeah.
Maybe as follow-up, are some of those kind of investment funds capitalized by the public sector in some capacity? And if so, what sort of regulatory frameworks might we have as barriers here to preventing that? Or is it wide open if indeed the public sector or others were to just start putting money on the table?
Yeah, many of the funds that I looked at do have public sector as like a base of their capital stack. So they may have several $1 million that comes in that's kind of equity. They don't need a return, or they can defer their return for a long time. They can sort of see it as a grant. And then there's different kinds of ways of structuring these funds. So I don't know what kind of regulatory barriers we would have here. What I noted more so than the regulatory barriers are kind of targeting and mission barriers. That in a housing preservation fund that wants to operate quickly in the market, it's harder to do the kind of deep social targeting that we tend to do here in our region, to dig down to an extremely low income rent, because that's what the market doesn't serve, right? So it's kind of preserving what the market can make and can hang on to. But as we looked at the sort of mismatch of people to housing, here there is a very real and serious squeeze for people in a low to moderate income level, right? That is 2 people at a minimum wage job or a person at a minimum wage job is very seriously squeezed in what they can afford and also in what housing is available to them. So there's a lot of kind of people living down market from what they can actually afford, and they're really crunching in that space. It is a lot of folks here, right? It's something like 1/4 of people in our region are living in this kind of housing.